Yo, what is good, guys? It's your boy VGOK here. Hope you're all doing amazing and are trading safely in the markets. Now, before I get started onto today's video, first of all, I want to give a huge shout out and a special thank you to everyone that made it onto mine and Pips of Persia's advanced live market structure training call we did last weekend. It was a great success. It was an amazing call. There were up to around 2,300 people that actually attended the webinar. And I know from a lot of your guys' messages and feedback that I got, a lot of you guys had those breakthrough moments. Now, don't worry if you missed the call. The recording of that call has been uploaded onto Pips of Persia's YouTube channel. And I'm going to put the video link in the description below. But yes, welcome to this video, and in this video I'm going to be going over how I was able to catch a 1 to 32 risk to reward trade on US30. Now, this trade was an example of a reaccumulation Wyckoff schematic in the New York session. So without any further delay, let's jump straight into the charts. What we have here is the before and after screenshots of the actual trade that I placed for this US30 trade. So as we can see here, I was looking to enter off of this imbalance fill just in this this candle here, having entry at the imbalance fill just over here, and then having my stop loss just below the previous low that was created. And then moving to the screenshots of during the trade, we can see the price comes into my 1 minute imbalance fill right here. It does go into slight drawdown quite close to the stop loss, but we were not stopped out in the end. And we can see that price did go into the desired direction. And then looking at the after screenshot of the final TP that was taken up at this point here, which I'll go into detail about in a sec. But we can see it was a nice, lovely trade. So starting off on the 4-hour and the 1-hour time frames, I just want to have a quick look at the intraday sort of trend that is being created throughout the week. So here we have Friday's price action, Thursdays, Wednesdays, Tuesdays, and Mondays. So starting from Monday, what we can see is price did decide to break down, and then through Monday and Tuesday, what we have is a bullish price action that is being confirmed. We're getting a series of higher lows and higher highs. Even from before, we had low, high, higher low, higher high, higher low, higher high, higher low, higher high, and so on and so forth. So we know from the higher time frames we're in a bullish market, so we want to be concentrating on taking the buy positions for that week. Then moving to Friday's intraday price action, we're going to be looking at the 15-minute. And we can see how the movement started to take shape. So from the London session open, and I believe this was on the 5-minute time frame, we started to see the creation of more bullish points of interest for US30. So my first point of interest, I was looking within this imbalance fill to this last institutional candle. Zooming in, we can see why I quite like this area as an attractive area for a point of interest. We had equal lows within there. We had the liquidity capturing candle coming down, and then a really aggressive move to the upside, which resulted in a break of structure of this previous lower high. So that was one POI which I was really looking forward to sort of seeing the price action come into. Upon the further analysis, what we can actually see is price coming down into the area just above the area actually, and not quite reaching my desired POI, and then we can see that it starts to take off further again. So upon further analysis, we have this 3-minute candle that I was looking at for the next point of interest, and here what we can see is a very clear base candle existing within here that took out these previous supply regions. There was supply that was in power here causing price to move down, supply that was in power here, causing price to create a lower low and move down. Supply causing these moves down as well. And we can see that this base rally formation had taken out that previous supply. So that's why I had it as another point of interest sort of entry area for that. But then upon further reflection, we didn't quite retrace down into there quick enough. And instead, we again rallied to the upside once more. Then carrying on with the analysis, I then had my point of interest, which was actually based upon the 4-minute base, and that was this base right here. And in the same fashion we identified this 3-minute base down in here, we've done the same thing. But we've got this significant supply region because it did cause a big decrease in price there. So this is a valid supply region, and we see that this is the rally, base, rally, candlestick formation that actually takes it out, introducing new demand into the market. Then after we've established this as a 4-minute base, a 4-minute demand zone that we want to be looking into for our further entries, we actually want to start looking at the lower time frame price action as it starts to approach the 4-minute base. Now, having a closer look at the lower time frame price action as it approaches our 4-minute POI or our 4-minute base, which is this purple box right here, we can see that price starts to consolidate. And when price starts to consolidate, it's going to be doing one of two things. It's either going to be distributing or accumulating. It's either going to be winding up for price to continue lower or winding up for price to continue higher. And this is what we're going to be taking a look at in this piece of price action. Now, the initial start of this consolidation has the look of a distribution schematic about it. We've got this preliminary supply, a buyer's climax, an automatic rally, a secondary test, and a sign of weakness. The start of it does look like it's forming that distribution schematic. But upon further reflection, and we actually see what price is actually doing in this zone, we can see what it's actually starting to create. And what we've got, it starts to create this liquidity on the bottom end of the consolidation here. And we've got that liquidity build up just above our demand zone. So, that could be an area for manipulation. Also, we can see that price, after a distribution schematic, we would expect price to really start falling away quite aggressively. Instead, what we have is this slow decline, which is still, technically, this is still a downtrend, a slow decline of price, which is known as this creek. Essentially, it's just, a trend line, connecting a couple areas of this price action. Now, as we see how price comes into our POI, we can see, after the liquidity creation here, we know there's a pool of money sitting here. There's an amount of liquidity here to be grabbed by the institutions. So what we can see is the market structure leading in to this movement into the POI. We can see we have a high, a low, a lower high, and a lower low. So we can see that this lower high, lower low, lower high, lower low formation is the spring part of our reaccumulation schematic. Now, this is where marking up reaccumulations and redistributions can be tricky, because the first half is always going to be looking like a distribution. So first half looking like redistribution. And I'll make that larger. There you go. So we have the first half of the reaccumulation, looks like the distribution, and it has a creek in this scenario. Now, reaccumulations, they don't always have to have this creek formation. But after we see a good reaction into, the main bulk of our POI, so we see the price coming into our POI and then an aggressive move up, which actually breaks structure above this significant lower high. We can see the break of market structure in this movement up as it goes above the previous significant lower high. We then look at where we can see the test is coming. And also we can see here that the BOS up actually went above the creek as well. And this is what's also can also be known as a jump across the creek within the schematic. Now, first POI that I was looking for was this little base within here. So I was looking at this base in here for a POI with the same reasoning as before. We can see the rally, the base, which is this doji looking candle, and then a rally up which takes out this supply, and it eventually takes out this supply as well. So that's going to be my first POI where I want to be looking to take entries in. I didn't enter off of this. I waited to see the positive movement away from this zone. Now, as we can see price further on, what we can see is lower highs and lower lows being created. Now, the important thing about this certain trade scenario is that market structure is based on the bodies of the candlesticks, not the wicks. So as we can see here, it was making a lower high, lower low, lower high, lower low, lower high, lower low, and then this move up. It was within this move up where I saw, and the entry I got was around here. I didn't enter until this point here, but this movement up, you can see the body of the candle closes above the body of this candle. So that is a relative break of structure, in my opinion. And what we can see is a imbalance existing within here, and we can see there is another wick down within this candle. So, on a smaller time frame, sub 1 minute, we'd be able to expect a 30-second or a 15-second sort of time frame, some sort of institutional candle within this wick. But yeah, I had my entry at basically the imbalance fill, the start of that wick, stop loss just below the low over here, and we were just observing price as it comes in, and as it goes off, we saw the positive movement. So there we can see the general spring area of the reaccumulation. We can see the testing area of this reaccumulation, which could be classed as this area, or it could just be classed as this point here. It depends which way, which time frame a trader is looking at the charts. So, some people consider this point here as the test, and then this point here as the last point of support entry. Or, some people could consider this whole sort of decline here, and then it moves off. So that could be the test, and then the LPS entry coming in again off the 5-minute time frame. So as we zoom back in to the price action, what we can see, after we have the test in this area, we see a 5-minute sell to buy scenario, having the main point of interest for the last point of support entries at this imbalance fill. We can see there could be a base existing within these wicks. As I zoom in, you'll be able to see that, there could be a base existing within these wicks that took out, there'll be a base rally formation that takes out these previous supply areas. And I've extended the point of interest down to 50% of this 5-minute institutional candle right here. And then as we can see, price does come into it again, having your entries for the LPS, and then it continues to go off. An important aspect about this trade is that we actually got our entries in before that main 2:30 p.m. volatility. So, by getting our entries in earlier, we'd be able to capitalize upon, the moves going into that 2:30 p.m. New York Stock Exchange open, but also, we'd be able to capitalize on the move at 2:30 as well. And there's definitely a base reaccumulation scenario within here on the 1-minute time frame as well. Now, taking a look at where I would like to take my profits, or where I did take my profits. Now with this trade, as we all know, the 2:30 p.m. volatility always usually comes in and affects US30 heavily. So knowing that, and providing I was on the right side of this trade, and by the time 2 o'clock came, I was in a nice amount of profits, so I wasn't too worried. And then, as the 2:30 volatility came, the market was pushed within our favor, accelerating our profits even higher. And I took most of my profits off, at that 1:32 risk to reward ratio, roughly a 1:32 risk to reward ratio, at the top end of that volatility spike. That was one way of taking profits. Another way of within this trade to take profits was, waiting and having that extra patience to see price actually revisit these areas, and then securing your profits in this area as price revisits this zone here. Now, one thing I wanted to actually go over with you guys was the fact that you don't actually have to be, amazingly accurate in your trades. So I've just done a small example of a certain trade scenario right here. So this is just assuming that your win rate is only 40%. You know, it's not massively high, it's above 50% or anything, but just assuming your win rate is 40%, your average risk to reward ratio, that we've been seeing that are very achievable, around 1 to 15 risk to reward. Only risking 1% per trade, and let's just take a number of trades taken in a certain time, 10 trades. Now, if we have 4 winning trades and 6 losing trades, so that's how the breakdown of this example is going to be. So here we can see exactly how we're going to be working out our net percentage. So we've got our percentage lost plus the percentage gained is going to be our net percentage gain. So with our 6 losses, our 6 losing trades, we're losing 1% per trade because that's our risk. But then with our 4 winning trades, we're gaining 15% with 4 winning trades. So 6 losing trades is minus 6%, but 4 winning trades at 15% per trade is 60% gain. And that gives you a net percentage of plus 54% or return on investment. So this is just sort of showing you guys that you don't actually need to be, amazingly accurate and, having this high accuracy rate in your trading. From the actual simple maths that we've just calculated from this example, we can really see the importance of risk to reward in our trading. And, we can see that, a couple wins will far outweigh any major losses. So even if we had a 20% win rate, we'd still be profitable overall. There we have the final 1 to 32 risk to reward trade on US30. Brings us to the end of the video. I hope you guys have caught value from this. And if you guys found value, if you guys felt like you've learned something and you've elevated your trading game, then please do like, share and subscribe. Stay safe in the markets and stay tuned for more of that trading sauce.